want you to be familiar, of course, with some of the most typical home loans out there and the type of down payment that are required to get these home loans. Now let's first talk about your very common loan. Now, that would be, of course, your conventional loan. Your conventional loan, what does that mean? 20% down, typically 20% down. Debt to income ratios, you have to have a good solid debt to income ratio, which means you can't have too much debt compared to your income. And also, of course, your credit score has to be pretty darn strong. Again, it all depends on the situation. But the biggest thing here is, of course, when it comes to down payments, it's typically substantial, and typically it's 20% down. The next one you might want to consider for your buyers, if again they're not familiar with the buying process, and they're not sure if they have enough money in their bank account or in their pockets or under the mattress, whatever it may be, is FHA loans. FHA loans are pretty darn nice. Now these are the ones that we've used, my wife and I have used for the last close to 20 years in our, with our buyers. Now, this is a great program for first-time buyers, but it doesn't mean it's just for first-time buyers. But it's a great program, a great advantage to the first-time buyers. Why? Because it's only 3.5% down payment. That's pretty darn reasonable. Only 3.5% down payment. That compared to the 20% that the conventional requires, my goodness, that's a lot cheaper. Let's put this into perspective. FHA loan, let's assume you want to buy a condo for $500,000. Condo for $500,000. If you went conventional, 20% of $500,000 is what? That's right, $100,000. Kind of difficult to save. If you went 3.5% of $500,000, looking at no more than maybe $20,000. That's feasible to save, or feasible for somebody, a family member, to help you out and maybe even gift it to you. You'd be so lucky if they can, but that would be a nice option. So conventional, 20% down. FHA loan, 3.5% down. Only regulation is this. There's a maximum amount you can borrow on this program. In LA County right now, it's $625,500 for LA County. Now the next one that's pretty doggone popular, of course, is the VA loan. Now I know you've heard of the VA loan before. Now the VA loan is great because it's zero down. Did I say zero? Zero down payment. That's pretty doggone amazing. Now of course it's typically good for the active military and those who have served in the past. Zero down. The fees are pretty reasonable. In fact, the fees, just so you know, because we want the vet to have it as easy as possible. After all, they did serve our country. You can request the seller of the house, to pay for the buyers, in this case the veteran, to pay for their fees, which means the veteran, when he purchases his house, he comes in with zero, not a penny. Now my brother did that, and it worked out beautifully. Now listen, you want to be a real estate agent. I get it. You got to know a little bit about the sellers. You got to know a little bit about the buying process for your buyers. Which means it goes back to speak to a lender who offers great products. Now by the products, I mean the great types of loans. Just now, we went over 3. Conventional, FHA, VA. A lot of people out there who are not aware of the type of loans that would benefit them. It's your job as a real estate agent to connect them with a great lender who has all of these options.